The world of cryptocurrency has been quite a trending topic for a long time now. Many people have resorted to this industry to seek an income. This brings us to a big question that many novices may be wondering. What exactly is cryptocurrency and how does it work? First, let us take a quick look into what cryptocurrency is. What is cryptocurrency? Cryptocurrency is a form of virtual currency that can be used for various forms of payment exchanges. This type of currency can be exchanged in return for a wide array of goods and services available to the market. To acquire cryptocurrency, one must pay in real currency. Many companies, especially the bigger firms, have their own cryptocurrency. These special currencies are known as tokens. These tokens can be exchanged with a company in return for goods and services. What is blockchain? Cryptocurrency is heavily reliant on technology commonly known as blockchain. The blockchain technology helps manage and record the various transactions that take place in a decentralized manner. The main advantage that comes along with using this technology is the level of security it provides. Blockchain technology is quite advanced when compared to normal files that we all have on our computers. Due to this reason, the security is further enhanced. Furthermore, this technology enables transparency as a blockchain file is stored on multiple computers across a network. This makes alteration of anything on the network hard to perform. Thus, hacking this technology is quite hard. High levels of computer science and mathematics are used in the form of cryptography to manage, store, and record data. This enables fraudulent activities to be identified very quickly. Cryptocurrency mining. The procedure of checking cryptocurrency transactions and adding new blocks to the blockchain is known as cryptocurrency mining. The computers used for mining procedures ensure that the sender has enough funds in his account to complete the transaction. Transaction details and the transaction history is cross-checked. Following this, the sender is given the authorization to undertake a transaction. After a second confirmation check is conducted, a private key is required to transfer funds. The mining computers collect data on all these transactions and compile it into a single block. This is then converted into a cryptographic link that has access to the previous block. After the successful generation of this cryptographic link, the newly created block is added to the blockchain file, following which an update is sent out across the network. Factors that move cryptocurrency in the market. Supply and demand are two main factors that cause the market to move. Due to its decentralized nature, no political or economical factors can affect this market directly. Even without this affecting the market, there is quite an amount of volatility and fluctuations that can be found in it. There are a wide array of factors that are known to play a deciding role in how cryptocurrency moves. Some of these factors, apart from supply and demand, include market capitalization, the portrayal of the cryptocurrency in the media, degree of integration with existing infrastructure, and most importantly, key events such as economic turmoil and breaches in security. How does cryptocurrency trading function? Trading can be done via CFD accounts, which help in predicting whether a certain cryptocurrency will rise or fall. The prices quoted are mentioned in real currency. No real ownership of the currency is ever taken. Moreover, CFDs are leveraged products that indicate that just a small portion of the entire trade value can be taken into consideration. Leveraged products may work for you or against you due to their losses being as magnified as their profits would be. Important cryptocurrency terms. There are quite a few terms that you may come across but not really understand. Let us break down a few important jargons that are very commonly used while cryptocurrency trading. Spread. Spread is a term used quite often when it comes to trading. When one subtracts the buy prices and the sell prices of the quoted cryptocurrency, one gets the spread. To open up a long position in the market, one will have to trade at the buy price, which is a tad bit above the market price. But if one opens up a short position, they have to trade at a sell price, which is a tad bit below the market price. Lots. Trading is never done individually but in batches of tokens. These batches are termed as lots. Lots are generally small due to the high volatility levels of the market. Many times, the lots are as small as just 1 unit of the currency. On the contrary, Trading in bigger lots also does occur. Leverage. Leverage is quite a common term that is used multiple times that confuses a lot of traders. In simple terms, leverage is a means of gaining exposure to a massive amount of cryptocurrency without actually having to pay the entire trade value. Instead of investing in full trade, a trader would put down a small deposit. This small deposit is commonly known as a margin. When the leverage position is closed, the profit or loss acquired will depend upon the full trade. Number and value of cryptocurrencies in the world. The number of cryptocurrencies keeps increasing quite rapidly. As of now, there are more than 10,000 different types of cryptocurrencies out there. These cryptocurrencies are traded publicly and raised money through ICOs, which is the abbreviation for initial coin offerings. Coming to the value of cryptocurrencies, its total net value runs in trillions. As of the 4th of August 2021, the value of the total cryptocurrencies has reached more than $1.6 trillion. Bitcoin has been the most promising and most famous digital currencies out there. The total value held just by Bitcoin is estimated to be around $740 billion. What are the best cryptocurrencies? Cryptocurrencies can be ranked in various ways, the most famous one being ranking them based on market capitalization. Though volatility and fluctuation are quite normal in the cryptocurrency market, here are a few currencies that are prominent in the world of cryptocurrency. Bitcoin is the most famous digital currency out of the lot and has been at the #1 spot for quite a while. Apart from Bitcoin, Ethereum, Tether, Binance Coin, Cardano, XRP, USD Coin, Dogecoin, Polkadot, and Uniswap are some other strong contenders. Reasons behind cryptocurrency's fame. The number of reasons as to why cryptocurrency is something everyone is investing their time and money in is plenty. One major reason would be it holding a high potential of being the currency of the future. Apart from this reason, the lack of involvement of the central bank has made it a big fan of many, especially with the constant inflation factor causing massive losses to everyone. Furthermore, the security technology behind cryptocurrency transactions has attracted many to utilize this decentralized process as opposed to transacting money the conventional way. How to buy cryptocurrency? Most of the cryptocurrency can be bought with real money. Some cryptocurrencies are strict in their transactions and only accept Bitcoin or other famous cryptocurrencies as a mode of payment. In order to make a cryptocurrency purchase, one must first acquire a virtual wallet. This wallet is an application that holds your virtual currency. To acquire a wallet, an account on an exchange platform must be made first. A good example of a famous exchange platform is Coinbase. Additionally, there are quite a few online brokers that provide individuals with cryptocurrencies. TradeStation and eToro are examples of online brokers. Robinhood is one trading platform that has quite a few users from all across the world. Its large user base is mainly due to its free cryptocurrency trades. With cryptocurrency being a trending form of investment, it is very important to understand the industry before hopping onto the bandwagon and becoming a trader. Even though the initial profits may be made, not studying the market and the various movements in it will result in immense losses in the long run. Understanding the volatility and fluctuations in the market while simultaneously looking out for trends is very important. This will enable one to be successful at securing profits regularly. With cryptocurrency slowly becoming a mode of payment for quite a few commodities and services, it's high time we understand this payment system.